Hey everyone, and welcome back to Investing Talk Podcast. Today, we're going to be looking at a company that's practically become a verb, Lyft, and see if their stock ticker symbol, LYFT, is worth your investment.
Yeah, Lyft's recent performance has been a bit of a roller coaster, and that's what makes it so interesting for investors, right?
Yeah, absolutely. I mean, this is a stock that swung between $8.93 and $20.82 in just the past year. I mean, that volatility can be a little nerve-wracking.
Oh, absolutely. And I think what's fueling this roller coaster is, a mix of excitement and caution. On one hand, Lyft just had a record-breaking year in 2024, but their projections for the first quarter of 2025 are making some investors, maybe tap the brakes a little bit.
Okay, so let's break this down for our listeners then. Let's start with the good news. Lyft brought in a record $4.3 billion in gross bookings last year. That's a 15% jump compared to the year before.
Yeah, it's impressive growth for sure. And their revenue also saw a significant boost, up 27% to hit $1.6 billion.
And they reached an all-time high in free cash flow, $766 million. So it seemed like they were on a roll.
They were, but when we look ahead, that projected slowdown for the first quarter of 2025 raises some flags. Lyft is forecasting bookings growth between 10 and 14%, which is a dip from last year's 15%. So does that make you reconsider investing?
It definitely makes you think. And their rides growth is only expected to be in the mid-teens compared to last year. Not exactly the kind of growth investors dream of. Plus, we can't ignore the competition, especially Uber.
Right. Uber is a huge rival, constantly battling Lyft for market share, and that puts serious pressure on Lyft's growth and profitability.
And to make things even more interesting, both Uber and Lyft are under investigation by the FTC right now for potential issues with driver wages in New York City.
It's right. This investigation could have a big impact on how they operate, so it's definitely something investors should be watching closely.
Now, let's see what the analysts are saying. As of February 15th, Lyft has a hold rating. What does that tell us?
Well, a whole rating often means there's no clear consensus. Some analysts are optimistic, others are pessimistic, and overall it creates a sense of uncertainty.
Okay. The average price target is $17.34, which could mean a potential gain of 32.38%, but that was calculated before the recent stock dip.
Exactly. Remember, the price target is just a snapshot in time. Things change rapidly in the market, so analyst ratings should just be one piece of the puzzle when you're making your investment decisions.
Now, let's talk about something really exciting. Lyft's partnership with Morabeni to launch robo-taxis in Dallas by 2026. They're using mobilized self-driving technology.
Yeah, this partnership is a major step for Lyft. They're placing a big bet on the future of transportation. Imagine a world with widespread robo-taxis. No more driver fees for Lyft. Potentially huge cost savings.
That sounds pretty revolutionary, but is it realistic?
Well, it's a long-term play. The technology is still evolving, and there are a lot of unknowns. Think of it this way. Lyft is taking a gamble on a future that hasn't arrived yet.
So it's more of a wait-and-see situation?
Exactly. We need to see how this technology develops and if consumers even embrace robotaxis.
Okay, makes sense. Now let's switch gears a little bit and look at some technical indicators. As of February 10th, there were some signs pointing toward growth.
You're talking about the golden cross formation, right? Where the 50-day moving average crossed above the 200-day moving average.
Yes, and the MACD line was above the signal line, another positive signal, but I know there were some mixed signals too. Can you explain those for our listeners who may not be familiar with technical analysis?
Sure. Moving averages are basically lines on a chart that show the average price of a stock over a certain period. The golden cross happens when the short-term average 50 days, in this case, crosses above the long-term average 200 days. And that's often seen as a bullish sign because it suggests that momentum is shifting in favor of the buyers.
So does that mean it's a guaranteed buy signal?
Not necessarily. While the golden cross can be a positive indicator, it's important to look at it in context with other signals. For instance, the RSI, a momentum indicator, was neutral at the time, and the CCI, which measures overbought or oversold conditions, was actually suggesting the stock might be overbought.
So mixed signals all around.
Exactly. Plus, the stock was trading above the upper Bollinger Band, another indication that a pullback might be coming. And in fact, we did see that happen shortly after.
So what does all this mean for our listeners who are considering investing in Lyft? What should they do?
Well, if you already own Lyft stock, you might want to consider a trailing stop-loss order to help protect your gains. We've seen how volatile this stock can be.
Yeah, big swings up and down.
Exactly. Now, if you're thinking about buying Lyft, it might be wise to wait and see how things play out over the next few weeks, maybe even months. Keep an eye on the price, watch the market sentiment.
Lyft has the potential to be a game changer in the transportation industry, but they are facing some serious challenges.
It's a classic high-risk, high-reward situation.
So the million-dollar question is, do you think Lyft has what it takes to stay ahead of the curve and dominate the ride-sharing market, or will they be left behind? What are your thoughts?
That's the big question, isn't it? The ride-sharing landscape is constantly evolving, and there are so many factors at play.
We'll have to see how it all unfolds, but one thing is for sure, this is a company worth keeping an eye on.
And let's not forget the wild card here, autonomous vehicles. That's a potential game changer for Lyft, but it's also a huge unknown.
Right, if Lyft can successfully navigate all the complexities of launching robotaxis at scale, it could revolutionize their business model.
Absolutely, but there are so many hurdles to overcome. Think about the regulations, the technological challenges, public perception. It's a massive undertaking.
And they're not alone in this race. Other companies like Waymo are already pushing forward with their driverless services. How does Lyft plan to catch up?
That's a great question. Waymo has a significant head start, but I think Lyft's strategy focuses on partnerships. By collaborating with companies like Mobileye and Marubeni, they're leveraging expertise and resources they wouldn't have on their own.
So instead of building everything from scratch, they're teaming up with specialists.
Exactly. And the Marubeni partnership is particularly interesting. It gives Lyft access to Marubeni's vast network in Japan, which is a huge potential market for ride-sharing and autonomous vehicles.
Ah, so they're thinking globally with this partnership.
Yes, and that's a smart move. The ride-sharing market is becoming increasingly globalized, so having a strong international presence will be crucial for long-term success.
Speaking of partnerships, what about Lyft's collaboration with DoorDash? How does that fit into the bigger picture?
That partnership is all about diversification. It allows Lyft to tap into the booming food delivery market, which is a whole new revenue stream for them.
And potentially a way to reach new customers, who might then try their ride-sharing services.
Precisely. It's a savvy move to expand their reach and reduce the reliance on the core ride-sharing business, which, as we've discussed, faces a lot of competition.
So even with all the challenges that we've outlined, there's still a lot of potential upside for Lyft.
There is. They're a company that's constantly innovating and adapting. They've shown resilience in the past, and they have a strong brand that resonates with consumers.
But it's definitely not a stock for the faint of heart.
Agreed. There will be bumps along the road, especially with their ambitious push into autonomous vehicles. It's a high-risk, high-reward scenario.
So for our listeners who are wondering if Lyft is a buy right now, what would you say?
I think it depends on your risk tolerance and your investment timeline. If you're comfortable with volatility and you're in it for the long haul, Lyft might be worth considering.
But if you're looking for a more stable, predictable investment, there might be better options out there.
Exactly. It's all about finding investments that align with your individual goals and risk appetite. No two investors are the same.
And that's why it's so important to do your own research. Understand the risk before investing in any company, right?
Absolutely. Never invest in something you don't fully understand. Take your time, weigh the pros and cons, and make informed decisions.
Investing in the stock market is always a bit of a gamble. But that's also part of the excitement, right?
That's true. There's always an element of risk. But that's what makes it so rewarding when you make smart decisions and see your investments grow.
Exactly. So as we wrap up our look at Lyft, what are your final thoughts for our listeners? What should they keep in mind if they're thinking about adding LYFT to their portfolio?
I think the key takeaway here is that Lyft is a company at a crossroads. They have a lot of potential, but also face significant hurdles. Their success hinges on navigating a rapidly changing industry, intense competition, and the unpredictable world of autonomous vehicles.
Yeah, it's a lot to consider.
It is. For potential investors, I would say this. Don't just jump in because of the hype or the fear of missing out. Do your research, understand the company's financials, their strategy, their challenges.
And think about your own investment goals and risk tolerance, right?
Absolutely. Investing should be a personalized decision. What works for one person might not work for another.
So true. Well, I think we've given our listeners a lot to think about today. What do you think?
I agree. We've covered a lot of ground, from Lyft's financial performance to their competitive landscape to their ambitious plans for the future. Hopefully our listeners feel more informed and better equipped to make their own investment decisions.
I hope so too. Now, we always love hearing from our listeners. What are your thoughts on Lyft? Do you think they have what it takes to be a long-term winner in the ride-sharing space?
Share your predictions in the comments below. We're always interested to hear different perspectives.
And don't forget to hit that subscribe button so you don't miss any future episodes of Investing Talk Podcast.
We'll be covering a wide range of companies and industries, breaking down complex topics and helping you navigate the world of investing.
Thanks for joining us on this ride through Lyft's stock analysis. Until next time, happy investing. 32 AF.